Morning, Alex B. Good to see you. Um, what is today? Today's Tuesday. It is October 28th, and at 10 a.m., the Richmond Manufacturing Index comes in, and that is medium impact news, guys. And that could upset the patterns that you're trading, the rules that you're following, the things that you're looking for to give you an edge and an advantage in the market. Um, so at 10 a.m., guys, be aware, make your decisions, decide whether or not you want to be a part of that potential reaction. And there's your link to news, guys. It's part of every morning check-in. And we're going to get going. We're going to have some fun. We're going to do what we do. And we're going to talk about, really first, we're going to talk about high probability trades, guys. Hey, good morning, Black Prince. Good to see you, man. Trade probability, guys, and I'm gonna slow roll as we get into the rules. Cheeseburger confidence, that's you in paradise. There's really three ways you'll look at the market. You'll look at your charts and you'll say this is high probability. This is what we're going to talk about for the first hour, whether it is NinjaTrader or whether it is TradingView, guys. And that means that all indicators on all charts align with the trade. Um, Pete, I heard Jim Belushi. This is the best of the best, guys. This is what we talk about for the first hour, two platforms. And here's the crazy thing. We talk about entries. Guys, I give rules for entries, which is only half of a trade. So when you're entering a trade and you know that it's high probability, you can say to yourself without hesitation, I have an edge. I have an advantage. I'm trading a pattern that I can prove wins more than it loses. Medium probability trades are a direct result of learning high probability trades, because when you focus on the advantages that create a trade rather than the money that you're hoping the trade produces, you are locked in to making sure that that edge is present. When one of your advantages goes away, you can say to yourself, hey, this is medium probability. It's no longer high probability. I may have to manage just a little more assertively. And guys, medium probability will be most of your trades. There's absolutely no doubt in my mind. Low probability, what I'm really hoping, and you know what they say, hope in one hand, poop in the other, see which fills up. What I'm really hoping is that you become so confident, so convinced that you can call your shots, that you're in charge of your entries, that maybe you just don't even feel like low probability is worth your time. It's better to sit around and do nothing. And you'll make those decisions, guys, based on advantages. So both platforms, I'm just going to throw this in here because it's out of order. When you look at your charts, I'm going to teach you to recognize three different things. You will be able to, well, that's not even on the list. You'll be able to know which way the market is trending, and you can choose to trade with the trend. You'll understand the momentum in the market. You will know whether or not there are things in the way that could create problems. And you're going to be given checklists to define entry, guys. And these three advantages, having momentum, a clear path, and a defined entry, that's a high probability scenario. That's the best of the best. This is our focus in the first hour. Not how to get in and how to get out, but just how to enter with an edge. When one goes away, it's medium. When two go away or three go away, guys, it's low probability. Make some decisions that serve you and your trading. Whoops. And what's going to happen is we're going to take the first hour to learn the rules that create the edge. I'm going to hand you plans. The plans have checklists for entry. Everything you need to be successful, you will get in this first hour, except the repetition that it takes to make it easy, to make it comfortable, to make it second nature. So we're going to talk about the rules. Those two yellow news move the market a lot. They can, Victor. They certainly can. Everybody in the room has the ability to simulate, guys. Simulator is like the batting cages. Simulator is like the driving range. Simulator is like standing at the free throw line with nobody else in the gymnasium and just getting the muscle memory to get good at what it is you want to be good at. So many egos bypass the simulator stage because they want to get to the money stage. They don't have the process in place, guys. Take the time, make a million mistakes. Do it on simulator. You can't lose money. But post pictures in the room, guys. This is the first step in becoming a confident trader. Show me what you're doing. Show me how you're reading your indicators. Show me where you entered. Talk about what you did, guys. And you'll get a private session with me. True story. You and I will ignore everyone else in the room while I look at your chart. We'll talk about the advantages. We'll talk about the disadvantages. We'll look for ways to do it better, to manage more effectively. And it's never my intent to upset you or hurt your feelings because you made a mistake. It's my job to help you correct the mistake so it doesn't become a habit. The more you post in the room, the faster you're going to get to where you want to be. And then the second thing is keep it simple. Simplicity pays dividends, guys. The fewest moving parts, the fewest things to think about typically yields the biggest results. So when I hand you the plan, and I'm going to do it right now, there are two plans, one for NinjaTrader, one for TradingView. And both of these plans are stepping stones in your learning journey. I don't give you every way to use the software, guys. That would take years. I give you the best way as a brand new user. Hand you a plan that is designed to help you learn to read your indicators, to recognize advantages. And these trades are designed to optimize your chances of success. There is an old adage, if you will. I don't even know what an adage is, that says that confidence comes through the memory of success. So if as a brand new user you can embrace a plan that provides the highest level of success, you are more likely to become a confident trader, confident in your plan, trusting in your rules. And then through simulation, study, class feedback, and practice, you're going to write your own plan, guys. You're going to find trades that fit your needs. You're going to find trades that you see that jump off the page. But whether it is NinjaTrader or whether it's TradingView, you will be handed a checklist for the greatest entry you could take with the software. And then from that one trade springs the second trade, the medium probability trade. And you're going to get this, and you're going to have that simplicity, but you've got to learn the patterns. And that's all this is. It's a pattern. The high probability trend trade on NinjaTrader is a pattern. It's a pattern that is repeatable, that is testable. Here's 500 pictures of that pattern on the spreadsheet that I just dropped in the room. Here are the rules to identifying the advantages in that pattern, guys. A place to build your plan and even a trade tracking sheet. And you got the same for TradingView. And guys, this is where the recognition comes in. And the more in tune you are with your rules, what it looks like to have your rules met, the slower the market appears to move. The faster you recognize that you have an edge, that you have an advantage. And when you really focus on the idea that advantages are the reason for a trade, you also realize that you're trading probabilities, that you're trading a pattern that you can prove wins more than it loses, but it does still lose, guys. And this trade, this is NinjaTrader, this is the high probability trend trade. I always start here. When these rules are true, when you have momentum, a clear path and entry, you have a trade that you can prove through historical testing, through live trading, has the potential to win typically 70 to 80% of the time, which means that 20 to 30% of the time you're going to be on the short end of the stick. And the reality is, guys, losses are a normal part of a positive equity curve. When you learn to trust your methodology, you stop focusing on the results of your trade, but rather you focus on the process, because you know over time, if you take 100 of these trades, you're likely to win 70 or 80 of them. And you know that you're going to lose 20 to 30 of them, which means that it's not the outcome, but rather the process. Momentum and clear path. Having momentum through strong triggers, having absolutely nothing in the way, guys. Once you understand these two, it opens the doors. It really sets you up for a lot of opportunity outside of the high probability trend trade. Your third advantage, the entry area, is a trend trade entry. It is a very specific pattern that you will be able to predict and call your shots and know exactly where that entry comes from. These three rules take two charts. That's it. Less is more. You have a large chart and you have a small chart. Your large chart is a very slow chart, guys. It is a very broad stroke of a brush. It's difficult to see change, and it really shows the overall opinion of the market. You will, through one bar on your large chart, the first printing bar, define the direction the market is moving. You will understand the momentum in that move, and you will know whether or not there is something in the way. Rules 1 and 2 are met on a large chart. When you have those first two advantages, momentum and path, your small chart is an entry chart, guys, and it shows you kind of an x-ray of that one bar. We make the decision to enter when the market is all the way down here, but we rely on the inner workings of that bar seen in the small chart to take a pullback at an area inside of triggers. And very often in a successful trend trade, it looks like your large chart sprouts a tail. Your small chart shows you exactly where that tail is most likely to form. And rule number 3 will allow you to reduce risk. It'll also allow you to really maximize your profit potential. We use these two charts because we're not in charge. We never will be. I'm kind of a big deal. I'm not in charge. I don't move the market. They don't even know I exist. They don't care about my position. The large chart is a large crowd, guys. These are what people refer to as the institution traders or big money, right? Apex predators in the market. These people create trends. They establish momentum. They react at areas. And we have the gift of knowing which way they're going, how fast they're moving, and whether or not they reached a spot where they may quit pushing. That's your large chart. Now your small chart are still a very powerful group of people. They're the small crowd, and they fight. So when these guys say up, they say down, and when these guys say down, they say up. What's cool is your small crowd typically loses 70 to 80% of the time when the large chart has momentum and path, which means that your rule number 3, your entry rule, is designed to put you in the market right where their failure is most imminent, and that becomes your entry for the highest probability trend trade. We're going to use indicators to recognize the rules being true. We're just learning to read indicators. So first, just learn the names. Don't put the pressure on yourself to understand the Fibonacci sequence or how divergence is created. Simply know that every time you see a divergence high, a magenta line, or a divergence low, a cyan line, that there was a loss of momentum at a pivot. That's it. The buyers were in control. The sellers told them, nope, we steal your momentum. Here's a line to let you know we did it. And that happens at highs and lows. You're going to see Fibonacci resistance, and when the market's in an uptrend, this is an area where the market may stop, it could bounce, it could reverse completely. Fibonacci support does the same thing in a downtrend. And then yellow 1-to-1s, these are like fibs in the moment, guys, and when the market is trending up, they are synonymous with red Fibonacci resistance, and when the market is trending down, they do the exact same job as Fibonacci support. And then you'll see that mid band running through the middle. That's a moving average, that's all it is. But we'll use it from time to time for entries on the small chart. You're also going to have trigger lines. Now, trigger lines are the busiest indicators that you're ever going to have. Trigger lines, there are two. There are small trigger lines, 2 solid lines, and there are large trigger lines, 2 dashed lines. One is a fast-moving average. One is a slow-moving average. You're going to use triggers to define momentum through rule number 1. You're going to count trigger lines when they reach an area, when price gets to an area, to define termination conditions, rule number 2. You're also going to use large triggers. See that little tail right inside of the large triggers? You're going to use large triggers to define your entry on the smaller, faster chart. So every rule utilizes trigger lines in some fashion. All you need to know is that these are small and these are large. So now we're going to break down the entry for the highest probability trend trade ever, guys. Rule number one says that the large chart must have strong triggers. And guys, strong triggers either is or is not. Let it be that black and white as a brand new user. When the background is green, we're in an uptrend. The only way I can have strong triggers, the only way rule number one could ever be met is if both small and large triggers are also green. So 3 greens, and then the look for strength, guys, is just separation. Your small triggers break above the large triggers. The large triggers need to be wide, and when you have that combination, that gap between the two, the odds are favorable for the market to continue up. And you're going to see my NinjaTrader users annotating charts with the acronym OFM, odds favorable momentum. That's the one, guys. In a downtrend, background is red, small and large must also be red. And it's that gap between the two, when the smaller below the large, when the space is created, that lets me know that the odds are favorable for the market to continue down. Now, odds favorable momentum pushes a trend. It's a large chart endeavor. It's very hard to stop it. Odds favorable momentum will be what we look for to break those areas for a medium probability trade, guys. And odds favorable momentum is really going to give the ability to cover a couple mistakes that we all make as new users. So leaning on momentum is going to help your chances of success. But when the gap goes away, when the smalls return inside the large, we literally call this weakness, guys, which is the opposite of strength, which should send up a red flag for you. Weakness, anything can happen up or down. The odds aren't favorable for the market to continue down anymore. Now anything could literally happen. It's a crapshoot, guys. This is where the market tends to retrace from the middle of nowhere. This is when key Fibonacci areas are most likely to hold. And if you really keep it simple and you really keep it basic, you can say, I either have strong triggers or I do not. And let it be that black and white as a brand new user, because once you learn the basics, you're going to find opportunities in between those two extremes, guys. So is everybody good with that? Strength leads the way. Strong trigger lines, the advantage of momentum. It's hard to stop. If every trade you took had momentum, life would be a lot easier. But there's got to be nothing in the way. There's got to be a clear path, guys. So termination conditions are rule number 2, and it says that there should be none present. And the textbook termination condition is that it is a Fibonacci-based indicator with the potential to reverse the market. I like to say it's a horizontal line on the large chart where the big crowd is making decisions, guys. It's divergence highs, resistance, yellow 1-to-1s. It is Fibonacci support, divergence lows, yellow 1-to-1s, guys. This is where the people in charge, this is where the men and women who create trends, this is where the men and women that give us that momentum, where the folks who drive that market are most likely to make decisions and fight one another, exit their positions, enter a new position, take profits. And the cool thing is that you guys will know about it long before they ever get there. If you enter a trade all the way down here, you're going to see that red line for the whole 10 minutes it takes to get there. And you're going to be able to say, this is an area that could stop the market. This is an area that could create a bounce. This is an area that could reverse the market completely. So when the market gets there, I'm going to wait and see what the reaction is. And that's the first step in defining a termination condition. Let your dynamic Renko bars reach Fibonacci resistance. Let your dynamic Renko bars reach Fibonacci support. Because when price reaches the area, then the large crowd makes decisions. Your trigger lines will tell you exactly what to expect out of that area in the moment, guys. So if price reaches Fibonacci resistance and none of your trigger lines get above that area of resistance, big goose egg, that area is a termination condition. That is an area that could reverse the market. That is an area that could create a bounce that could take you out of a long position if you choose to enter. That is an area that could break. And I want you to accept from day one, I never know what the reaction is going to be. I have no idea. So if price reaches an area and none of the triggers break, I'm just not going to trade into the area. If I'm already in a position, what a great place to take profits, knowing where the market is likely to go. But if I'm not in a position, I'm going to sit on my hands. I'm going to embrace the 90%. I'm just going to do nothing. And then price reaches Fibonacci support. None of the triggers break. Once again, I'm in a holding pattern. I don't know if it's going to break. I don't know if it's going to bounce. I don't know if it's going to reverse completely. Rule number 2 is designed to keep you from having to form an opinion about an area. Rule number 2 is the result of tens of thousands of pictures, guys, of countless hours of study that says when price reaches an area and the triggers are unable to break that area is more likely to hold than it is to break, which means in the moment, every time I reach an area and the triggers don't break, I choose to do nothing. In a live market, it'll look just like that. Price will reach that area, and from that area, if the triggers can't break, it has the potential to reverse. And if the triggers can't break, it has the potential to reverse. Holy smokes. There it is again and again and again and again. So trading is about advantages. It's about having an edge. It's about putting yourself in a position with the least problems in your way. So is everybody good with that? Price reaches the area. We're done with price. Let's look at trigger lines to tell the story. That's your termination. Rule number 2, not met. Absolutely no trades. But they do break. They don't always reverse off of Fibonacci resistance. And this is what it looks like when an area breaks. And there's 3 steps. The first step is price reaches the area. All the triggers remain above support, number 1 right here. This is a termination condition, and now I have to just sit on my hands. If I'm not in a position, I choose not to enter a position. I choose to wait for the reaction. I choose to just let the large crowd decide what's going to happen rather than impart my opinion upon the market and hope that I'm right. The second step here is when 3 of your trigger lines, both small and 1 large, get below the area of support. This is a look for a potential breakout. This is a look that lets me know with all that momentum, that area has an awesome chance of breaking. This will be the second trade on your NinjaTrader KISS plan. This is what we call a 50-50 trade, and it gives you the opportunity to capitalize on that potential to break. It would be considered a medium probability trade that needs to be managed a little more assertively. But when all 4 trigger lines get below Fibonacci support, now Fibonacci support is broken. Now my path is clear. Now the advantage of rule number 2 is in play, guys, and that advantage of rule number 2 remains in play until I reach the next area. And then I'll go right back to number 1. And when Fibonacci support breaks, when 4 triggers get below, it behaves as Fibonacci resistance. That key area doesn't go away, it simply reverses its role. And very often you'll see in the market, and I think we just saw an example earlier, that when Fibonacci resistance breaks, very often there's a retest as support. And when Fibonacci resistance breaks, very often there's a retest utilizing that key number as support, guys. So not only will you see that number, but you'll also know that it's reversed rolls. And in an uptrend, it does the same thing, guys. When price reaches an area, and learn this language, when price reaches an area and all 4 trigger lines remain below, just sit on your hands, wait for the reaction. That is the way to keep yourself from trading opinions and focused on the advantages. When 3 trigger lines, both small and 1 large, get above that area of resistance, now it has the potential to break. That potential is based on the momentum. There is a plan and an entry rule for taking advantage if a trend trade opportunity presents itself, but it's not until all 4 trigger lines, both small and both large, get above that area of resistance that we consider resistance to be broken. And now the path is clear. And like I was saying, resistance will behave as support once it's broken. And guys, your path will remain clear until you reach the next area. Is everybody good with that? Price gets there, we're done with price. Let's count triggers. But I'm going to let you in on some sad news for most of you. There will be times when your path is not clear because of stacked areas, guys. And this is 90% of your day. And I think I omitted this from the very beginning of the PowerPoint. 90% of your day will be spent reading indicators rather than actively trading. 90% of your day will be spent waiting for rules to be met instead of entering and exiting the market, guys. So if you spend 6 hours in your chair today, you're likely to be active 36 minutes. That's not a long time. So there will be times when you're really exercising that patience bone, guys. But what's cool is the futures markets exchange an average of $220 billion hourly. Hourly. The S&P, for example, typically trades $174 million a day. If you can find a way to capture $500 a day, $400 a day, guys, you're at a six-figure income based on your trading. And there is an easy way to do it. And when you have momentum and when the path is clear, defining that entry, learning how to get paid, learning how to get in at the best spot and get out at trouble, guys, you will see the potential. Just from sitting in my room for 3 or 4 days, you're going to see everybody doing it. You'll see the potential for a pretty easy $400 to $500 a day. The hardest thing you will ever do will not be to learn these patterns. The hardest thing you ever do will be to sit still when the patterns aren't present, when the advantages aren't present, guys, because we get caught up. And tell me if I'm wrong here. We start watching markets move. We start watching ticks produce and the up and the down. And we can't stand the thought of not being in every move. And we can't stand the thought of not hoping that areas break or that a lack of momentum will push it through. And guys, if you just learn that the next trade is coming, that the next opportunity is coming, that there is so much more, it really does create a little bit of patience. So when I have momentum, and this is always the first step, making sure that I have strong triggers, when my path is clear, because there are no termination conditions present, I'm going to go define my entry, guys. And that's rule number 3. Rule number 3 is very specific. Rule number 3 is very precise. And it is so precise that you're going to use a limit order, which I think is pretty awesome. You're going to use a limit order to buy or sell a pullback, that little fight by the small crowd. And a pullback is defined as a small move counter to the underlying trend. So when this says up and this is strong, your pullback is a series of down bars on a small chart that is more likely to fail than win. And you're going to do it at an area. You're going to do it at a fib, at a mid-band, at yellow 1-to-1s, because the same way on a large chart, those areas can stop a trend and become a termination condition. On the small chart, they can create a bounce in the direction of the momentum in the clear path. But here's the key to the entry success, guys. You're going to buy or sell a pullback at an area inside of triggers. And your small chart has 2 sets of triggers. It has large triggers. These are smooth. These are native to the 5-1 chart, the small chart. You can use them with that comparison against the small triggers to define the momentum on that small chart. And then you also have large triggers, guys. And large triggers are called synthetic triggers on the large chart because they are superimposed from the large chart. And I want to show you something. Large chart has large triggers. There they are down there. You can see them. And then the small chart has large triggers. And triggers are moving averages. And whether it is a small chart or a large chart, price tends to return to moving averages. Price pulls away and sucks back to them. And price pulls away and sucks back to them. And we're going to use that phenomenon called the regression of the mean to define where that retracement is most likely to go. And that's a big part of the pattern, is being inside of that retracement zone. And then when you put a fib, midband, or yellow 1-to-1 in there, now you're giving the market something to bounce from, guys. So when you learn entries, and it's just a pattern, it is an entry pattern, I want you to write down this phrase. If you are the note-taking type, I will buy or sell a pullback at an area, and then in all caps, inside of triggers. And if you learn this phrase before the market ever gets to the reversal bar that starts the pullback, you will already know exactly where your limit order belongs. You will call your shot sometimes 3, 4, 5 minutes before the market ever gives you an entry. So when the large chart is up and when the momentum is strong and when the path is clear, this is what your small chart looks like, guys. It is screaming north, and it's screaming north without you. And you're going to have to battle that fear of missing out, waiting for your pattern. The reversal bar begins the pullback. This is not your entry. This is a little loss of momentum that hopefully gets you back to your entry. So this reversal bar lets you know that the down bars are coming, that the small crowd is fighting. You can define where the retracement is most likely to go by using your triggers, large and synthetic. Somewhere from the top line to the bottom line is where that market is most likely to retrace. But it's the areas inside, the fibs, the mid bands, the yellow 1-to-1s. These are like brick walls and the price is like a tennis ball. So we're expecting, if this trade is going to be part of that 70 to 80%, we're anticipating that one of these areas will create a bounce and send us in the direction of the large chart advantages. Now, because of the momentum on the large chart, because the path is clear and there's nothing there to create a bounce, your job will be to activate a limit order just above the highest point of support, guys, and this becomes your entry for the highest probability trend trade. Any lines, any fibs, any mid bands, any yellow 1-to-1s below the triggers, beyond the retracement zone, beyond the areas inside, this is where rule number 3 is no longer in play. This is where your advantage is no longer in play. This is where you no longer have an edge, guys. We call this the wrong side of the triggers. And you don't know if, when, or where that market is most likely to continue back up once you get to the wrong side. You're actually going to use this for stop placement. And in a downtrend, it's the exact same pattern turned on its head. First, the large chart says down. Then the large chart says you have momentum, and the large chart assures you that your path is clear, all through your indicator reading. Small chart starts the fight. There's your reversal bar. The reversal bar is not your entry. It's the beginning of the pullback. The pullback, where it's most likely to go, is defined by the trigger lines, large and synthetic, bottom to top. The red box says, hey, these up bars could go all the way to the top before the market continues down. But it's the areas inside, fibs, mid bands, yellow 1-to-1s, that we anticipate creating the bounce in this winter. And your limit order will go just below the lowest point of resistance. And you are now in the highest probability trend trade ever. Because you can define precisely where the market is most likely to continue, you're going to learn to believe that anything beyond the triggers, good morning, Miss Trina, anything on the wrong side of those triggers is not an area for entry. Once you get beyond the triggers, you don't know if, when, or where the market is likely to continue. So Swathy asks, did I make a mistake on clear path? So Swathy, I want to go through some very specific language. Are you ready? And I want you to learn this phrase. Do you see the magenta line, the divergence high? So when price reaches a line, we'll just say a line, I want you to count triggers. And there are 2 trigger lines that make the small, and there are 2 trigger lines that make the large. So here is your key. If no triggers go through, it's a termination, rule 2 not met. If 2 triggers go through, it has potential to break, but not very high probability. If 3 trigger lines break through, it's a good look for a breakout. And if 4 trigger lines go through, it's a clear path. So if you learn this little bit, price reaches the line, count triggers. Do you see how there's 2 trigger lines going through? And this is how trades come to be, and this is how you start to go to that next step. So you can look at your large chart, and what you can say is I have momentum, and you're really good at defining those strong triggers, but the path isn't clear, and it's not my best look for it to break. And it doesn't mean, Swathi, that there might not be a trade, but it means that because you know that the path isn't clear, you can look for little telltale signs over here. Divergence tends to be a pretty big killer of these trades because divergence is a loss of momentum, and we need that momentum to push through. You do have a very well-defined area, which is nice. You do have a great spot for a stop. I notice you're trading without stops and targets. We need to talk about how to put those in just so that you can put them in the right spot. But do you see how when it's only 2 triggers through, you can say before you ever, that's okay, we'll talk about it. We'll talk about it in the second hour. You can say to yourself, I have all the momentum. It's only the potential to break. Let me make sure that my entry is perfect. And that's what puts you in a medium probability trade. Divergence is very often a big killer of these trades. So when price reaches that line, I want you to start counting triggers. And it's going to tell you everything you need to know about whether or not you have a clear path. And let me see, I think I have a pretty good picture. I like this one. Let me drop this in the room for you. I made this one a while back. So no triggers through. It's okay. It's in red. It's not your best. It's a termination. Rule number 2 is not met. You don't have the advantage of a clear path. 2 triggers through. I kept that number red because it's not the best look for a breakout. 3 triggers is yellow because you still need caution. It's not a clear path. 4 is green because now the path is clear. So when we go back, let's go look because I think it's pretty cool that we can do this. Let's pull up crude oil. And we are in the middle of it, right? We are in the middle of it. 2 triggers through. It did pull back to the area inside of triggers, and now we're just prepared to manage because we know it's not a clear path. Does that make sense, Swathi? Because we know it's not a clear path, your management hat is on. You're like, whoa, I may need to get paid a little quicker. I may need to get break even just a little bit faster. And Swathi, right here under ATM strategy, if you hit the down bar, these are all sorts of different management strategies. So one that might be good for what you're looking at right now is that very first one. 2 lot, 12 tick stop, 20 tick target. And you can start building your own if you want. And we can go through how to do that if you need to, or Jim can help you build an ATM strategy as well. You can reach out to him. And there is everything that you need to know to build it. And of course I'll help. Please don't take this as I'm not willing to help. But right here, this will help you build an ATM strategy, and that'll help you quite a bit. Good stuff. Great question. And that question was worth stopping class for a little bit because as we go to entries, it's important that you know what you're up against. So awesome. Did that make sense on counting the triggers? And you can use that idea. Price reached this line and none of the triggers broke, and look at the reversal, right? And the same is true here, and the same is true here. And over you start to see these. I love that question because it means that you're leaning on advantages. And Swathi, you've already gotten good at entries. I see that on your chart. Pull back to an area inside of triggers and just be ready. No. Sorry. No. So any area on your large chart, can stop the market. Divergence highs, Fibonacci resistance, yellow 1-to-1s, they're all equal. And when price reaches one, you have to count the triggers, and it'll let you know the story. So areas on a large chart, and there's your little roadmap with all the area names. So it could be, and let's go back, and I love this. I like when we revisit lessons. It can be a divergence low. It can be Fibonacci support. It can be yellow one-to-ones, right? It can be Fibonacci resistance. And what you'll find is that you'll know about these long before you get to them. And as these divergences on the small chart, whoops, where did it go? Where's my small chart? As these divergences continue to print on the small chart, as we continually lose momentum on the small chart, this line becomes less and less apt to break. So you entered on the best shot. You knew where trouble was, creates a management opportunity. And then as you watch divergence print, you can say to yourself, oh no, I'm losing divergence. And I need that momentum to break this area. I'm going to have to manage. I'm going to have to get a little more aggressive in my plan. Good stuff. Good stuff. And guys, again, because with this methodology, we're talking about entries. We're talking about getting in at the best of the best spot. We're talking about getting into the market with 3 advantages proven to win more than they lose when you follow the rules. Your ability to define entry, to use that phrase, buy or sell a pullback at an area inside of triggers, it lets you know exactly where the advantage is gone. And your initial stops based on the KISS plan will go where the market should not. And that's about 5 ticks above the trigger lines, beyond the retracement zone. It's about 5 ticks below the trigger lines, beyond the retracement zone. And once you get to the wrong side of those triggers, guys, you just don't know if it's going to continue with the trend. You don't know where it might bounce. Because once you get to the other side of triggers, and I'm going to see if I can keep these examples going. This is a great example right here. Once you get beyond the triggers, it could very well be game over. And once you get beyond the triggers, and we'll use this example up top. So the very top of that move is right here. And you had momentum, and you had path, and you had an area inside of triggers, and you had the opportunity. It created a bounce, and your initial stop didn't get hit, and you probably maybe even took first profits. But once it gets below those triggers, once we get about 4 or 5 ticks below, look at how far it pushed down. The market still went back up, but I didn't know if it was going to be a mid-band or one-to-ones, or even if it was going to come down to fibs. So once you get 4 or 5 ticks beyond those triggers, guys, it's okay to cut ties with that trade. It's okay to say, you know what, the edge isn't there, the advantage isn't present. I choose to exit rather than hope. And all that we've just talked about is just a pattern. That's it. This is the same thing. It's repeatable. It's definable. You can go back, you can study it, you can click on these pictures that are presented from, oh my gosh, this one is from 2022. And it is momentum, and it's the potential to break, and it's a pullback to an area right inside of triggers, guys. And it's the exact same entry pattern, and it's the exact same advantages on the large chart. And it is everything that produces the best of the best. And all you have to do is learn that pattern. So you can do it, and I think it's easier to do it when you're not trading. When you're not giving yourself the adrenaline of entry, of exit, of management. So go back and study. When you see momentum, and when you have a clear path, or even that potential to break, and you see one of those tails print, guys, circle it. And if it lines up, and here comes the language again, if it lines up with a pullback to an area inside of triggers, that's your trade. So if we open it up, and let's go see if we can find one. Well, I mean, the pattern, Swathy called it perfectly right there. With momentum, with the potential to break, there's your pullback to an area inside of triggers. And where else can we do it? There is momentum. And there is your clear path. And there is your pullback to an area inside of triggers. And I even circled this one earlier. There is momentum. There's your clear path, and all be gosh, there's your pullback to an area inside of triggers, guys. So language becomes huge. Language becomes very important because I know before I ever get a reversal bar with this look, before I ever get a reversal bar, I know exactly where my areas inside of triggers are. And all I have to do is wait for the small crowd to get their poop in a group, to give me the pullback, to hit that area, and then to head off into the great beyond. And that's your pattern, guys. And it's repeatable, it's testable, it's provable, and you don't have to be in a trade to drill it into your brain. Go back historically, guys. Find those tails, circle them, get it into your mind, learn the language, and then when you're watching the live market, it will literally slow down for you. Can you say why did you say it is a clear path? Because four triggers were above the area, Swathi. Let me go find it real quick. Because on the bar that we're looking for the entry, both small, both large have gotten above the Fibonacci area, and price had not reached the next area. That's your best of the best look. And the only time a midband is a termination condition, Swathi, is if those large triggers stay a full bar away, and that's a great example of it right there. But when the large triggers are close, when the momentum is strong, when you haven't reached the area, that is your absolute best look. 4 triggers. So you're going to get in the habit of counting triggers. It's a termination condition. It has the potential to break, and now it's broken, and it becomes resistance. And it's the same every time. So every line will be a termination condition for a moment. And then it has the potential. And then if the market continues up, then it becomes a clear path. Does that make sense? Awesome. I love it. All right, guys, let's go to TradingView. That's NinjaTrader. Guys, NinjaTrader's been around a long time. TradingView is kind of the new kid on the block for us, but it's really not that big of a change. So if you are in the Nexgen Pro Trader funding, you need TradingView to trade, to take advantage. And the cool thing is that most of the indicators are exactly the same. Yellow 1-to-1s, mid bands, small and large triggers, divergence highs and lows. Guys, it's all very familiar. The difference is there is not Fibonacci on TradingView. Programmers haven't figured out how to pull it from different servers and make it print yet. So there is a company called ChartPrime. It is $50 a month. If you don't want to spend the money on ChartPrime, there are free options. I can point you towards them. But there is a reason that I spend the $50 a month on ChartPrime, because in my opinion, this is probably the most accurate supply and demand zones that I've seen. And they will behave like fibs. You're not trading directly into them, guys. You're trading from them. And that's really the only difference from an indicator standpoint. Now, the bar structure is different. Dynamic Renko is a fast-moving bar, guys, and it is based on ticks, not time. TradingView uses a 15-minute and a 1-minute bar. Large chart is 15 minutes. Guys, this is so slow. It is so slow that in the plan that I give you, I have actually put in workspaces that don't even use large triggers, that don't even use background colors. You can define direction, momentum, key targets, and terminations really with nothing but the indicators and the small triggers. Areas and triggers. Now your 1-minute chart does have large triggers on it because we're going to use these triggers to define the immediate strength in the market, to define entry points. And the 1 minute, while it's a faster chart than the 15 minutes, 1 minute is still a long time. And you can put a timer on it so you know when that bar finishes. If you need help with that, please let me know. But again, we're using the 2 charts because there is a big crowd and they typically win. And there's a small crowd, and they typically lose when the large crowd wants to win. And we're just going to use that same concept. so that we can define higher probability entries. So the large chart, the 15-minute chart, the slow chart, the glacier chart, guys, it's going to define direction, momentum, and areas the same way it always does. But because it's so slow, we're going to use the small triggers on a large chart. So if you still have large triggers, learn to ignore them. If you still have background colors, learn to ignore them. Or keep it simple, take that out of the equation, and just use the workspaces that I give you. You will define direction through the direction of the small triggers. It's either up or down. If you can't tell whether it's up or down, they can't tell whether it's up or down. They're in the middle of a fight. Leave it alone, right? So it's either down or it's up. And we're doing it on the most current bar, the in the moment. Small triggers are up. Does everybody see it? That's how we define direction. And now I'm going to blow up that picture, that little segment. And the next question that you have to ask yourself, and guys, this is going to not only define momentum, it's also going to get you ready for management. Where is the current price, the highlighted price? You're going to see it on the bar. Where is it in relationship to those small triggers? Is it to the left of it? Is it inside of it? Is it to the right? And each location carries different weight, guys. If you are left of the small triggers, above them in an uptrend, really below them in a downtrend, guys, you're on the strong side. And from the strong side, I want you to see this as odds favorable momentum. This is when the market is pushing the absolute hardest in the direction of the trend. This is where 1 minute areas are going to be most likely to break. This is where you're going to find yourself managing for larger moves and bigger holds. If it is to the right of the triggers, in a downtrend, you'll see it over here. In an uptrend, you'll see it up here. This is the weak side, and there's that word again, guys, weak. I'm still looking for long trades, but now 1 minute areas are more likely to create a bounce than they are to break, which means I'm probably going to take profits right at areas, sit on my hands, and wait for the next trade. And then if it's inside of the triggers, this is transition, and this is where it's going to be most of the time, to be honest with you. This is where I'm going to be aware of those 1 minute areas. And I'm going to say to myself, you know what? I'm into contracts. I might take one off at the first sign of trouble. I might get to break even, and then we'll see if the market can push through. And when you know what direction to go, and you know where price is in relationship to the small triggers, you are set up to manage that trade, and you'll know how you need to manage that trade before you ever enter. And then the final question on the large chart is there room to targets? Do I have some place to go? Is there room to make money, guys? And if that's a no, if you're trading directly into an area, if you've got $30 worth of profit potential before you hit something solid, why are you taking the trade, right? So if this is a no, it's okay to do nothing. But if it's a yes, guys, there's two types of trades that I teach, two types of trades that are on the plan. And guys, both of the trades only have three things that you have to look for. The first one that I'm going to talk about is the trend trade. Now, this is the most common trade. And I would say, without hesitation, you could have a pretty awesome, successful trading plan if all you ever took was trend trades, guys. Starts with a 15-minute not trading directly into areas, room to targets. It's imperative. It's rule number one. And if it's not true, you don't have to go to rule number two. Nobody can make you. Rule number two says that the 1 minute's not trading directly into areas. And dollars to donuts, you're going to see people breaking this rule today in the room. Because this is the most broken rule, because this is the one that forces you to sit still, to do nothing, to wait for the advantages. And then finally, if rules 1 and 2 are met, it's a flow chart. If, then, I'm going to buy or sell a close on the correct side of the small triggers on the 1 minute mid-band and areas. And I think I need to change that language because I'm going to look for a pullback to an area. So when the small triggers are up, when they're in transition, I know how I'm going to manage this trade, and I have room to targets. The instant my small triggers turn down, whether they're above the large, whether they're below the large, the instant they turn down. My job is to look lower, to look down 10, 15 points sometimes, and look for an area. Look for a mid band, look for yellow 1-to-1s, pink 1-to-1s, look for a zone. Because I'm going to wait for the market to come back to something that's more likely to produce a bounce. But the entry is different. The entry is different than you Ninja Trader people that are accustomed to just waiting for the market at the area. Your entry is an up bar for a long trade. This is important. An up bar that closes on the correct side of the small triggers. So you're going to have an up bar. Both corners are going to be clear of the small triggers that are down. That's the weak side of the small triggers, and that becomes your entry for the trend trade. And if you are following rules, you will see your entry on the next bar because you will let that bar finish printing, and then you will just mash that buy button, and that's what typically sets you off to profits. Your entry requires a lot of patience. Your entry may take 5 minutes, it may take 55 minutes to get you that perfect entry. And I wanted to show this, and this is the patience part of it, guys. This was a trade. Where did it go? I thought I had it up. There we go. This is a trend trade that I took yesterday, guys. And I literally waited almost 2 hours for that trend trade to happen. And once my small triggers rolled against me, I had to wait for the pullback. And when I entered with the close on the correct side, that's when the market went up. And your trend trade entries will look the same every time. There has to be a pullback. There has to be an area. There has to be a close on the correct side in a downtrend. First, it's down triggers. Then it's where is the most current price in relationship to the triggers. Then there is, do I have room to get to trouble? And if you can answer yes to room to trouble, the moment the small triggers turn against you, you're going to look higher. You're going to look for mid-band zones or 1-to-1s, and you're not just going to enter, because look at this, 1, 2, 3, 4 bars. And then finally there's a down bar that closes on the weak side of those small triggers, and that's where the market rockets off and takes you with it. So the trend trade is the same pattern every time. The trend trade is based on the idea that, and this is beautiful, based on the idea that as long as those small triggers are against me, until I get 2 corners above them, that market's probably not going to push up. Did you see it just launch? Small triggers up. It was transition, maybe even weak side. Tons of room. And guys, that was your perfect trend trade. And I am really hopeful that somebody's going to show me an entry around 41. And that is a 27 points before it ever hits trouble, guys, which is $540 per contract. And I'm hopeful that somebody's going to show me that picture in the room, because that was freaking amazing. And that is everything that we just talked about. And you just saw it happen and rocket live. The next trade is a momentum trade. This is about 10% of the trades you'll take on TradingView. And it starts with nothing in the way on the large chart. That's really kind of a recurring theme, guys. Have room to trouble. The 15-minute must be on the strong side because that's the odds favorable momentum. And how on earth could you ever take a momentum trade without momentum? And your 1-minute chart must have strong triggers. Only 370, huh, Victor? One of my favorite phrases in this room. I only made $370 in 8 seconds. Damn it. Nice. Annotate your chart. Drop it in the room. Well, that's because 570 is how much there was before it hit something. So we can talk management if you want. But guys, when you have strength everywhere and nothing in the way, this is the only trade that uses a limit order. The only, oh, well, that's a good reason, Victor. This is the only trade where you'll wait for the market to come back to you with a limit order. And what you're saying is that with momentum, with strong side, with odds favorable, if the market breaks this area, and I want to show you a picture on this trade because a lot of you guys are fudging this one up. That bar is not a break. That bar is not a break. Guys, you want to see it get away from the zone and then pull back to the zone. And what you're saying is, I sure hope that zone with all of that momentum continues up. And it's a very low risk trade. Stops go just below the zone. And this is the trade that typically sets up maybe 10 to 15% of the time. When you have this look on a large chart and this trade fails, it almost always turns into a trend trade, guys. So it's a very low risk shot at trading momentum, but it's not the most common. But when it's down, when it's strong, when there's room, there's your break, there's your pullback, super low risk, and you're just hoping that it goes. I like a good momentum trade every now and then, guys, but I think you could build a plan. You could build a strategy based solely on trend trades and have an enormous amount of success. So you guys in Nexgen Pro Trader funding, can I talk about the biggest mistake that I ever see? I got you, Trina. I can turn anything on. You ready? So down here in the bottom right, click that little wagon wheel and go to more settings. So from more settings, there's two that I want to show. The first one, under trading, there's your execution marks right there. That'll get you in, and that'll show you where you entered, where you exited with the execution marks and the execution labels. The other one that I want you guys to see is countdown to bar close. And that'll literally put a timer on your 1 minute bar so that if your rules say I need a close on the correct side, you'll know exactly how long you have until you know whether or not that close is in play. So Trina, did you see it? From trading, execution marks, execution labels. Here, let me do a picture. There you go. Guys, the biggest challenge that I see with people in the funding company, because my job is to watch you guys trade, looking for consistent traders. And the biggest challenge that I see every day is fighting these small triggers, making an opinion. And the second thing I see is trading directly into areas and believing that being a tick above an area constitutes breaking. Momentum and path, guys. Momentum and path. It pays dividends regardless of which platform you're on. So that's my first hour. My first hour is the same every day. You now have rules. You've been given plans. There's study sheets. You have the ability to get feedback, to ask a million questions all day long, guys. No questions go unanswered. You have the trading plan, all that good stuff. You've got analysis, rules, and coaching, guys. That's my job. To teach you to read your indicators, to help you learn the rules, and to give you feedback on everything you do. You're responsible for becoming a trader, for becoming a profitable trader, guys. I'm here to help, but you have to do your part. What is your part? Your part is posting in the room, asking for help, letting me know that you have questions. Your part will be filling out this spreadsheet, guys, taking pictures, annotating pictures. I was talking to a buddy yesterday. And guys, when I lose a trade, and I think this is even more important, when I lose a trade, I'm looking for an example, but NASDAQ has been absolutely giving tons of opportunity. I go back and I analyze and I say, what went wrong? And I type out what went wrong. And the same is true when I win a trade. If you take the time to say triggers up, price on the weak side, I know how to manage, space to the next trouble, small chart triggers rolled after bounce on divergence area and 1-to-1s, got in, moved my profit target out of the way and set stop loss, and it was over. Could not get to move my profit target in time, ended with 370 only, LOL. And guys, there it is. So Victor, one of the things that I would talk about, and guys, this is what the second half of class is going to be, is I would ask Victor, I would say, hey, what happened here? Because if you entered at the first up bar on the correct side of triggers, you have less risk and you have more profit potential. Does that make sense, Victor? So guys, I'm not knocking Victor. It's a beautiful, beautiful trade. But from here, you were coming back from the loo. There you go. But from here, the risk is minimal. From here, the profit potential is huge. So guys, when you post in the room and I see that you don't get this one, I will ask why. Sometimes it is I didn't trust it. Sometimes I wasn't sure. Sometimes it was, well, the triggers were against me. And we'll always go back to the rules. And guys, coming back from the loo is a valid reason. That just wasn't his money. But nicely done, Victor. Nicely done. And guys, that's what the second half of class is going to be. It's going to be looking at your chart, looking at examples, looking at entries, looking at exits, talking about the good, focusing on the things that we can do better, having a conversation, and just moving you to that next level. So I'm going to take about 5 minutes. When I come back, I'm going to click on every chart that's been posted in the room, and we're going to go back to momentum, path, and entry. Ask a million questions, and we'll watch the live market, guys. And if we're looking at the live market and we can get rules met, we'll enter, we'll manage, we'll have some fun together. But we'll do it from a place of education and information. I will not call trades in this room. I will not tell you how to trade, where to trade, when to trade, but I will give you feedback on your trades. I will give you feedback on your questions, and we'll work together to get you where you want to be. So I'll be back in 5, guys. Go stretch your legs real quick. See you in a minute. That guy, always taking breaks. All right, guys, I'm going to scroll up to the very top. I'm going to start clicking on pictures, and we're going to see what we can come up with. We'll see what you guys are doing, what you guys are seeing, how you're seeing it. Dun, 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 dun. And then we'll just talk about it. As usual, it's the Pete Show to get us going. Someone asked me the other day, hey, Mark, when's a good time to trade crude oil? And Pete, I referenced you. I was like, Pete's up early in crude oil and finding opportunities before most of America's awake, I think, because it starts moving at like 2 a.m. Eastern. That's when the European markets open up. So if you have a limited schedule and you're looking for opportunities outside of normal hours, guys, there's probably a lot of it in crude oil. All right, almost there. Paul W. Pablo posted in the room. I like that. And Miss Trina, were you able to get everything squared away on what you needed? I'm a worrier. I gotta know. Yes. Takes you a minute. It takes all of us a minute, Trina. And now you're going through and you're learning something brand new. So once again, I like to say it, give yourself a little bit of grace, right? Don't expect to be a trading view phenom straight out of the gates. You'll get it. For sure. All right. Strong top, odds favorable, room to trouble. And Pete says, I'm not going to trade directly into a fib. Mama didn't raise no dummy. So he gets in with all that momentum below the fib, and he says, all right, with all this push, it's likely to head down lower. So he takes a quick little run that is based solely in momentum and the potential to break. And you'll notice that he exits when that momentum starts to go away, when the reversal bar prints. But with this look, Pete also knows, because Pete is so in tune with his rules, that when a momentum jump in fails and the large chart looks like this with momentum and the potential to break, it typically just turns into a trend trade. And look at that sniper entry. And then he rides it down to that new fib update. And just outstanding trading, Pete. And I'm going to start collecting pictures for the highlight reel. I don't know if you guys know this, but every day I'll post on YouTube and I think Facebook too, if you're a Facebooker, y'all's trades, your amazing trades, your entries, your exits. So guys, I want you, and I posted this yesterday, I want you to brag. I want you to post in the room, and I want you to show off. But here's the deal. If you want to show off, post your winners. But if you want to become a more confident, competent trader, post your losers, guys. Don't hide losers from me. It's fun to show everybody how big it is, right? It's fun to tell everybody that, oh, look what I'm doing. I'm a badass. But man, it's the losers. What's your thing? What's the mistake that you tend to make? And if you're not sure, if you can't answer that question, then if you post in my room by your fourth or fifth picture, I'll know exactly what your thing is. And I won't just go, oh, dang it, Trina, here's your thing. Darn it, Jen, here's your thing. Darn it, Aaron, this is what you do wrong. I'll say, hey, here's how you fix it. Here's what you can do to help avoid the problem that seems to be creating losers for you. And it will work together, guys. And all I have to do is see what you're doing. Pete, this is one of the indicators that's on Chart Prime. And I don't know exactly what triggers it. You could go through, I gave you a link to the documentation. You could probably find it. Or one of the things, if you don't know what it is, Pete, just go through and go to your Chart Prime indicators, look at the settings, and see if you can find that red arrow that's got a check mark next to it. But I'm not sure. I'm not sure which one it is or what it is. because I don't use it and I turned it off. So sometimes I'll defer you guys, go to the company that created it, right? Or just, I know you guys hate to do this. GTS, man, Google that stuff. Go to the Chart Prime website and go to their documentation. I gave you the link. Do a little research, guys. It's okay. Because Chart Prime's not a next-gen indicator, right? Chart Prime is not a next-gen indicator. You'll probably get quicker answers by going to their website, the same way you'd get quicker answers on T3 indicators if you didn't look on the Ninja site for them. So, good stuff. All right, strong trending market. Everything is up, guys. So STM, I learned your acronyms too when we talk a lot. Strong trending market, and that means that there are 30 bars in the same direction. 30 bars without a reversal bar, guys. That defines a strong trending market. And when you have a strong trending market, even if there's not separation, you can assume odds favorable momentum. And Pete knows that. And Pete does such a good job capitalizing on it. Because Pete says with odds favorable momentum getting above trouble, he goes, man, I'm going to ride that momentum. I'm going to get in on the other side of things that can create a bounce, and I'm just going to run it up. And man, this is such a great trade. And I want to show you guys something that Pete does really well. So when I tell you to go Google stuff, I'm going to also give you some props. One of the things Pete does really well, and I'm going to do this two ways. When you know what kind of trade you're in, and I'm just going to type it out, and I'm going to pretend that I'm Pete for a second. Because this trade is rooted in momentum and path. And that's it. There is no pullback to areas inside of triggers. It's momentum and path. When one goes away, I'm done. And that's it. That's the mentality. When it's rooted in momentum and path, Pete says, well, when one goes away, I'm done. So when he gets to the weak side of the small triggers, when he's already taken profits, he's like, GTFO, baby, I'll wait for the next trade because I'm that good, and the next trade is always coming. And guys, you're going to see that a lot. You're going to see the difference in $200 versus $400. The difference between $300 and $12 is all rooted in momentum or not momentum, management. And management is defined by the type of trade you're taking. And Pete, you really do that well, understanding your advantages, understanding your disadvantages. And I love it because it's a great lesson for the newer people in the room, for you guys that are learning to manage. What you're going to notice is that if you can define the advantages that get you into a trade, you can identify when those advantages go away. And if you're in a trade hoping things work out, hope lingers a lot. So trend trade gone bad. And Victor, we're finding a pattern, and we're going to fix that pattern. Because a trend trade is a pullback to an area with a close on the correct side of the triggers. And the second rule on a trend trade is room to trouble. And guys, outer bands are trouble. And Pete and Victor, you traded directly into trouble, and then you didn't believe it. And it came down, and you didn't believe it. And your small triggers rolled against you, and you didn't believe it. And your small triggers started pushing down, and you were getting closes below zones, and you didn't believe it. And then you get this bar, and you're like, oh, thank goodness. Oh, thank goodness. And then it's odds favorable momentum against you straight from a termination. And it's down, it's over, that's it. And I know, Victor, because I've done it. And you will hold a trade, my friends. You will hold a trade that you are witnessing fail. 1, 2, 3, 4, 5, 6 minutes worth of failure. You'll hold it because you hope it goes up. And I'm so guilty of that, Victor, and I recognize it. And I find very often, guys, if you talk about the mistakes you make, right? So don't do this. As you can see, it did not work. That's the initial. But what Victor's going to do is Victor's going to go back to his tracking sheet, And he's going to say, I traded into a termination condition. I was so late on my entry, it had nowhere to go. I'm going to do better next time. Does that make sense, Victor? And you will. And you did. We're going to get to it, and you're going to see where you actually did do better. Oh, no. These aren't loading. So give me just 1 second. Was that it? No. Let me figure out where we were. Victor says, I would love to know how I did this. Man. Guys, if you can use screencast links, it helps. So you had strong triggers up. You had nothing in the way. You had strong triggers up. And Victor, can we agree you just jumped the fudge in? You just said, I sure hope the market goes up with momentum and path. Do you guys see it? But does it stand to reason, Victor, that when both charts are the strongest look ever, when there's absolutely nothing in the way, that the market has an awesome chance of continuing up? And because of that awesome chance of continuing up, you were able to capitalize on a quick snippet. TV chili dog, Ron. And when does the advantage go away? Well, on a 1 minute chart, it can take forever. So it also stands to reason. Make a couple hundred real quick. GTFO, right? Because momentum goes away. And on a 1 minute chart, it's hard to see it. It's harder to manage these jump-in trades. So quick profits make sense. And Victor, I think you did an awesome job on that particular trade. That was $1,000. I'll take $1,000 all day long. It's hard to feel bad about it. It really is. And then just another jump the fudge in trade, guys. And there was a time, Ron knows the time, when I was like, guys, it's a pullback to an area inside of triggers. And Ron said, but Mark, when you have momentum and when the path is clear and when the triggers are strong and there's nothing in the way, the market tends to go in the direction of momentum and path. There's so many more ways to capitalize on it. Stop trying to stifle me. And then we talked it out. But guys, with momentum and path, you can jump in, right? That's your right. And hold it until it stops going, if that's what you want to do, or take quick profits. But once you understand momentum and path, guys, there's so many more opportunities in the market. So many more opportunities in the market. And let me figure out, because some of these aren't opening. I'm going to post this picture. See if this will open. Golly, get smaller. Victor took this trade. Here's his momentum trade, right? And Victor, this is the exact same look as the one that we just talked about, as your gold trade. And just jumping in because of momentum. And that's all it is. Just jumping in because of momentum. But Victor called it a trend trade. And Victor, thank you for letting me put you on the spot like this. Guys, the trend trade entry is a pullback to an area inside of triggers. It looks like this. This is jumping the fudge in because of momentum. Does that make sense? It's not right or wrong, but it's not a trend trade. And the reason that I brought that up, the reason that I said, hey, Victor, you can't really call that one a trend trade, is because, let me go back. Because a trend trade comes from the pullback to the area inside of triggers. To jump in higher than where the trend trade even happened, how could that be a trend trade? This was your trend trade entry. That's where your trend trade stop goes. So I encourage you guys, name your trades, right? Name your trades and understand where the entries come from. And if it is just jumping the fudge in, that's cool. But you don't want trend trade risk on a jump the fudge in. I will, Wayne. Disgusting to post this. No way. Not at all. 15-minute up, transition, clear path, 1 minute, close above the small triggers. Not a lot of room into the outer band. Late entry, exit when the small triggers rolled short. Down bar, still above, no need to have exited. 90, minus 90, poor rule knowledge. And it was into the outer band 1 minute and above the outer band, which means long's okay. So the question is, it was transition, Paul. It was a pullback to the area. It was a close above, but you didn't have a lot of room into that outer band. And look at it. It's like 1, 2, 3 hits, 4 hits off the outer band. And that fourth hit gave you a close below the small triggers. There's nothing wrong with that exit. There's nothing wrong with that exit. And it feels like a bad exit because it did this next, right? But from the transition side, when you reach an area and nothing changes, I love your exit, Paul. And every now and then, we're going to take a $90 hickey. And then it's going to do everything that you hoped it would do. And that's just a reality of trading. And I think that the entry makes sense. And I think that the trouble was identified. And I think that the reaction off of trouble, when it just couldn't seem to run, you did a great job. And this is not an emotional exit. This is a rational exit. That's an exit rooted in losing your advantages that got you into the trade. Nicely done. And that's another reason that posting in the room, guys, it helps. Because when you post in the room, sometimes you think you really messed it up, but the reality is you didn't. You didn't mess it up at all. You did it perfect, but you've convinced yourself because of what happened next, there had to be a mistake there. And that's just not the case always. And then the king of momentum and path. Get in below trouble, get out at trouble, get out with a loss of momentum, get back in below trouble, and take it to trouble. Pete, great job. All right. These aren't loading the way I want them to load. So guys, if you post in the room, if you want to use a screencast link, it makes it a little easier. You don't have to. I can work through it, but I do have to scroll back real quick and find some of the ones. So if I missed your trade, do me a favor. If you find that I start looking beyond where you were posting, don't be afraid to repost in the room. Let's see. All right, open that link because it wasn't open. Paul, we saw you. Pablo, make sure nobody gets left behind here. Make sure nobody gets left behind. And then Wayne, give me a couple charts, and we'll get you the split contracts. And again, and I don't mean to beat a dead horse, but remember, guys, Google has all the answers. Google really does have all the answers. All right, 15-minute was up. Transition, or strong, don't know. If you don't know, always easier to err on the side. There's your pullback. There's your close inside. Inside. I got you, Wayne. Not above. Do you see it, Paul? First trade that long, you thought that it closed above the small triggers, but it didn't. And then the down bar didn't. And there's your entry right there. Super low risk. And off it goes. And you take the next one, and you still manage to capitalize. Re-enter the long. So mistake. Can you guys hear me? Okay, it was you, Pete. It's a mistake, Paul. It's okay, right? Because now you know that you entered too soon. You'll be a little more aware of waiting for the correct entry. And then that's the one right there. And you were so busy losing this trade on the early entry that you missed the best, but you got it, and beautiful. Nicely done. Nicely done. All right, trend trade up. Now this is the trend trade. Exact same trade, right? Everything is up, transition, need to manage on the small chart, clear skies, pull back to the area, close above the triggers, and then you are out one, getting to break even, and out 2. Nicely done. Small triggers are up, strong side of the triggers, nothing in the way. Pull back to the area, close on the correct side. In at 67, out at 78. Nice. And then Pablo, my only question is, did you see that big red line in your way? And if you did, were you prepared to manage if the market didn't get through it? That would be the only question I can ask on this one. And guys, remember that when you look at the large chart and you say I'm on the strong side of the triggers, these areas are more likely to break. And Pablo took a shot. He said, man, from the strong side, from the right side of the triggers, from an area in an uptrend, I'm going to take a shot. And risk was in the perfect spot and out of trouble. Nicely done, Pablo. Trend trade, triggers up. There's your pullback. There's your entry. Late entry because he was in the loo. Perfect entry, easy money. And then we saw this one as well. I was double clicking a couple of them. All right, Wayne, are you with me? Guys, let's do a quick lesson on splitting contracts. Let me go to a market that gives me some room to get it done. Okay. All right, guys, so quick run. And guys, this is simulator. This is not a real trade. This is not something that has rules met. So Wayne, if I enter, and I'm going to just make it a 2 lot, or you're trading a 3 lot, is that right? You want to do it as a 3 lot? 3 contracts, 3 different targets. Are you with me? Let me know you're with me. Okay. So if I go short 3, stop losses are just slide and pull, right? I'm going to put that hopefully where the market doesn't get me before the lesson's over. And I'm going to do the same thing with a profit target. I'm going to put it off in ridiculousness,ville. So I'm short 3, and I will always use the profit target from TradingView for my furthest target, where I really want the market to go. So if I'm thinking it's going to go down here, that's where it goes. So now what I need to do, Wayne, is if I want 3 different ones, I need to change my quantity down to 1. And because I sold, a buy limit will take 1 off. A buy limit will take 1 off. So I can stagger them all the way down. If it hits my first contract, it'll pull one of the contracts off. It'll adjust it on the stop loss and the final target. And if it hits my second contract, it'll take the second off and it'll pull me down to 1 contract on both. So you'll enter with, if you just hit sell now or whatever, and then you can use limit orders. So if it's a sell, it's a buy limit to exit 1, and it'll auto adjust. And if it's a buy, a sell limit will auto adjust and pull you out. Does that make sense? So you're going to have to get some quickness on there. And from here, oops, if I bought, if you go through and you look at the TradingView stuff, there's some way to do partials with it. I haven't figured it out or been able to follow those directions, but just using limit orders. And so let me give you a word of warning. If you are on Apex and you enter the market and you don't have the profit target, you don't have the stop loss like you would on AMP or Nexgen Pro Trader Funding, if that's not there and you put a limit order to take 1 off, your stop loss and your final target will not adjust on its own. You will have to go back through and manually change that number. So depending on what you're doing, but if you're trading Apex accounts, anything Trade-Evade doesn't have that auto reduction. And you'll want to be aware of that, or if you just move your stop and it gets hit, it's going to actually reverse your position. I've made that mistake quite a few times. And then you can just go back and practice it on simulator. And I think that's it. I love being able. It wasn't? Yeah, I wasn't sure. Um, so like if I get in 4, right, you could, without ever moving your stops and targets, you could just put a limit order there. But I think putting it off in the distance and giving yourself the reaction time helps a lot. But I would encourage you guys, practice it a little bit. Don't just wake up and hope you're good at it. Do it on simulator. Get those mechanics down so that you can execute quickly. Could you enter a limit order and preposition the preposition the targets? So if you were going to do that, you would have to go to trade and you would have to enter your profit target and you would have to enter your stop loss. See how they show up over here, predefined? And then you would have to, well, it's in the wrong spot. So you'd have to have your limit order down here. And if you hit buy, it'll put everything in place. So you can do that from over here. And you can even create presets. So if I'm going to buy the NASDAQ and I click that, whoops, it's not applicable on that one. I don't know why. Settings need to be adjusted, time and force. I don't know what that means. But you can do that to where I can say, okay, if it comes here, I'm going to buy. This is where I'm going to set my profits. And I'll just activate that limit order. Good stuff. All right, let's see what we have. We saw that one. There's your pullback, early entry, correct entry. Got it all back. Nicely done, Paul. All right, close on correct side of the triggers. Price kept bouncing between zone and HVA. Fortunately, it was able to pull out a position, only costing commissions. So remember when I said, guys, we'll recognize your thing? Weak side, no room to the first sign of trouble. It's hard to justify, right? And then it hit trouble, which from the weak side is a great place to get paid. Thank goodness it didn't take you out. And then it came back and said, seriously, Pablo, it's a weak side. Get paid. They literally gave you the next one. And then finally you said, okay, I'm not going to do it. But guys, room to targets. Room to targets will force you into a position of patience. Room to targets will keep you from taking trades. Look at this. Perfect entry, out at trouble. That's so nice. What a great trade. This one didn't have room. And guys, this is where hair falls out and turns silver. Good stuff. All right, strong side of the triggers. Pull back to an area. Close on the correct side. Out at the outer band. From 47 to 61, Trina? Trend trades are pretty easy on TradingView, aren't they? Isn't it crazy? You had 1, 2, 3, 4, 5, 6, 7. You had 8 minutes. 8 minutes to wait for that great entry, and you knew exactly what you were looking for, and you did it beautifully. Nicely done, Trina. All right. Transition. Pull back to the area. So Trina, you just didn't have anywhere to go. Wouldn't you agree? With that big ugly zone right in front of you, just no room to targets. And thank goodness it broke. The red wasn't there in the trade? Okay. Then perfect. Oh, I didn't see that. Yeah, this will happen. Those will show up every now and then. Well, then in that case, absolutely perfect, Trina. Pull back to the area. close on the correct side. You waited for it to close. I know that because it shows your entry on the next bar. And it goes right up to the outer band. Two perfect trend trades, Trina. And guys, when I say that you can build a trading plan on nothing but the perfect trend trade, you definitely can. And Cam, I like that you're practicing and posting in the room. Let's see what we have. Not the best look. Loss of momentum. Selling resistance after triggers broke through. After trade close, manage second trade printed. So let's see what we're doing here. All right, so let's go through, and it's going to take me a second here. So Cam, I'm going to build this a little easier for me to read, if you don't mind, with your permission. And I want to do three things. I want to do this because I want you guys focused on a couple different things. And I feel like if this becomes habit, Cam, was it stressful being in that trade? Did it feel forced at all? And I pay attention to that. So when I'm in a trade, I pay attention to how I feel. And I just want to go through it. And you identified it. You didn't have momentum, right? And you don't have any areas inside of triggers. So we're already missing two. The only thing you really have working for you is a clear path. And what I will say is that you managed it beautifully. It's a late entry, and you didn't have any momentum. There was no momentum pushing that market down. And good job recognizing the fib had held, but I didn't give you any time to manage. And this is one of the reasons why I think that if you get in the habit of saying, do I have momentum? Is my path clear? Can I define an entry? There becomes a point, and there may not for some of you, there becomes a point where you say, man, 2 out of 3 missing, there's got to be a better opportunity coming. 2 out of 3 missing, there's got to be something that's at least medium probability coming. There's got to be something that's high probability coming, because that Yahoo mark tells me every morning that the market typically exchanges $174 million during the day. So Cam, I think your management was perfect. And I mean perfect. Second higher divergence, exit the trade. Outstanding management on what can only be described as a low probability trade. How could you have done it a little bit better? If you're really banking on that resistance holding with the clear path, Cam, and I know that you were late on it, the reversal bar gives you a little more room to the first sign of trouble, quick profits, and there just wasn't any room for you to wiggle, to be honest. It's a good look for more down, but from the very core, the closer you are to this fib, the more time you have to manage. Entering just below the fib, 69.11, or just let the market tell you that it's going down. So when we talk about entries, Cam, and I'm going to go through, I'm going to show you this. Once you get to the wrong side of the triggers, which means once you get beyond the retracement zone, the reality is that the market could bounce off of a fib. The market could go all the way up to the mid-band with that weakness. And that's a huge gap. And it means that this fib isn't a surefire. The mid-band isn't a surefire. It could go all the way up here where your entry was defined. So one of the ways to kind of navigate that, one of the ways to avoid just getting run over on the wrong side of the triggers, whoops, is to force the market to give you the down bar, because then at least you can put your stop a couple ticks above that down bar. Does that make sense? So a lot of times the market moving in the direction of your trade at least gives you a place for stop management. And very often it's going to be on a 5-1, it's going to be 12 ticks. It's going to be a 12 tick stop, 120, because if that market runs you over, it's going to be a bigger loss. But if you wait too terribly long without advantages, it's hard to create the expectation that the market will just continue down if there's no momentum pushing it. Does that make sense? I love a confirmation bar. When I've got 2 out of 3, maybe I've got momentum and path, but I can't define an entry, I love a confirmation bar. Or maybe I don't have the momentum, but I do have path and entry. Something that says, yep, let's get you in because we're headed that direction. Something that gives you a place to put a stop. It's a good look for more down, but the late entry just didn't give you time to manage. That's all it was, but you managed it beautifully. You really did. You knew it wasn't perfect. There's no doubt in my mind, Cam. And because it wasn't perfect, you took that as an opportunity to manage. All right, let's see. Unfolded literally as you were talking about holding on to trades that were failing. Oh, Aaron. I used to do this with John Novak. I would take a trade and start losing, and he would start having conversations about why that trade was going to lose. And I would still hold on. It is amazing. Had several chances to get out, around $20 or $40 loss, but I hoped the market would continue trending down. But then it kicked me in the gut with a massive upward bar on the large chart. And stupidly kept moving my stop a few ticks at a time, hoping it would correct downward again. Clearly didn't wait for the correct entry, jumped in, completely mismanaged, and made out with a $300 loss. I also keep getting into trades right before they reverse. I keep either being impatient or just keep entering the trade at the wrong time. So, Aaron, two things. Two very important things that I'm going to say before we even look at your charts. One, you are an absolute rock star for putting this picture in the room. An absolute rock star. Because 90% of my class won't do it because it sucks to stand up in front of 36 people and say that you did something wrong. So, man, just my hat is off to you, and I'm thankful that you would do this. And now let's get into a little bit of analysis that hopefully will help and help develop patience, Aaron. So let's go back to it. If every trade starts with momentum, do you see how your large triggers are green and your small triggers are red? So you don't have what we would consider, Aaron, are you in here? I know you're probably just sitting quietly. So I don't have odds favorable momentum, not yet. I just don't. So if I just covered this up, if you were looking at your chart, you said, you know what, that's not the momentum look. Doesn't mean I don't have a trade. It just means I know that I don't have the best of the best look. And then, Aaron, are you familiar with the gap theory? The one thing that defines a mid-band as a termination condition, and you may not be, and that's okay, because this means that we get to have an awesome lesson for everyone in the room. So when you go to the user guide, whoops, let me back that up and open it on a new tab. So when you go to the user guide, no worries, and you go to termination conditions, we're about to do a lesson on it because, Aaron, every one of us gets caught on the gap theory about 50 times before we finally learn it, at least me. When I say everyone, I just say me. So a large chart midband is a termination if the large triggers are a full bar away. So what that looks like is exactly like this. So if your price bars come down and hit a midband or a fib even, If your large triggers have space to create an entire bar back to it, that's what defines the termination condition, or the midband as a termination condition. And now you're saying, well, how am I supposed to know if there's a full bar? Let me take this and blow it up. You'll be able to define that, everybody in the room. So if the midband is here, even if price gets by it, if the midband is here, and these trigger lines, are you familiar, everybody, with the reversal bar marker? That line that shows you where this becomes an up bar. Have you guys seen that? Is this a new concept for anybody? Aaron, are you familiar with that? So the reversal bar marker shows me where this becomes an up bar. So if I hit that price right there, I have a full bar to the upside. My large triggers are beyond that point. They're above the reversal bar marker, which means, and let's go, that was crude oil, right? Oh, and there it is. When my large triggers are a full bar away, Aaron, remember how we talk about closing the gap to the large triggers? That's how we get our great entries. And there it is. It did exactly that. It pulled right back to the large triggers, and then it continued down. So that's what we call the gap theory. And what it does is it just says, not yet. Be patient. This could happen. Don't take that short trade yet, because it's more likely to suck back to those large triggers. If it's really going to go down from that termination, after it closes the gap, you'll get some indication of it. And if you scroll back, there it is again. Midband sucks right back to the large triggers. Areas sucks right back to the large triggers. And it's just the idea that price returns to large triggers. And if I had a nickel for every time I fought the gap theory and lost, Aaron, I would be a rich man. I wouldn't have to be a day trader. But you got to learn that lesson a little bit. And that was one of the biggest challenges with the trade that you presented, is that not only did it really not have the momentum, but it was more likely to close that gap. And remember how the jump-in trade, and we talked about it, if you're going to take that jump-in trade, if you're not going to wait for the best entry, you've got to at least give yourself a fighting chance not to give it all back. And that reversal bar that closes on the other side, that's it. That's your exit. Because once you get that, you're more likely to push up. And this is nothing more than the fear of missing out, which is a very, very real, it's a very real phenomenon with traders. But there were a lot of context clues on the large chart that should have kept you out of this entry, because you didn't have the momentum to push a momentum trade. And then with a little bit of study, you'll recognize that clear path problem. And you didn't have a clear path, so you were already void of everything good that the large chart creates. Does that make sense? This entry is nothing more than the oh shit, it's going without me entry. Can we agree to that? Because I've done it, and you probably see it 100 times in the room. Done it. Aaron, you're not alone. And we've all done it. We've all seen it. We've all tried it. We've all lost it. So I will never say don't take that entry. What I will say is that make sure that the large chart supports it. Guys, jumping in because of this super fast movement on the small chart, and that's all it is. It's like adrenaline. It's like a shark feeding frenzy. Have to get your spreadsheet practice. Post that trade on your spreadsheet in the column trade management. I love it, Cam. I love it. And then Aaron, when you go back, and I love that you typed out your story, but go back and Aaron, I would take this picture. Where did I put it? And I would say gap theory. I would say just from this right here, when price hits the midband, if the large triggers are above the reversal bar marker, price is likely to close that gap. And you could take this picture and go to your spreadsheet and put it with the other 75 pictures, of the gap theory. And I really have. I've filled this with gap theory pictures because it is such a common thing. And once you learn to recognize it in the moment, right now Wayne is on the edge of his seat going, when you learn to recognize the gap theory in the moment, there's people that'll take trades to close that gap because it's such a common pattern. You had the right idea. Just a couple missing parts there. Momentum isn't great, but the path is clear. And the entry is well defined. So let's do it again, guys. And I really am. I'm a broken record. So Aaron, you're saying where was the rules-based entry? I don't see one. I don't see one with momentum, clear path, and entry. And what you're assuming, Aaron, is that just because the market went down, there was an entry. There wasn't. You didn't have momentum. There's no areas, like you don't have the advantage of momentum. The mid-band's still a termination. If you were going to take this trade, you would just have to jump in and hope. There isn't one. And that is probably one of the best lessons, is that 90% of the time, you're really doing nothing. But check this out, Aaron. Momentum, potential to break, pulls right back to the area inside of triggers, and with that momentum finishes the move to the fib. And I made this picture earlier today because check it out. If you scroll back a little bit, there it is again. 100% momentum and path, pull back to the area inside of triggers. And this morning, and I do this a lot, guys, when I'm waiting for rules to be met, I kind of muse and take pictures and talk about the things that I see that maybe we could turn into lessons. And I took that picture. And this is a great example of how learning rules pays dividends. This is a great example about having a rock solid plan that you're willing to follow. Pays dividends, guys. Because if you took this perfect trend trade and you made money all the way up and you're up $300 already from one trade, from 5 minutes of your life, don't you think that you would be less inclined to take maybe trades? Don't you think you would be less inclined to jump in at the top of moves if you learn this one pattern that seems to produce positive results 70% of the time, and you study it and you learn it and you trust it? Doesn't it make sense that ultimately, you'll hit a dead link? That ultimately, through that study, through that trust, you find yourself in a position where you can't wait for that trade, and you almost become a little bit of a trading snob. I don't want to jump in up here because more often than not, it does this. I don't want to trade with weak triggers because I don't have the advantage pushing me. I don't want to trade into a termination condition because really, F that stuff. That's not my trade. But if I can catch 4 of these a day and win 3 of them, I'll probably make more money than I could ever spend. And the hardest thing you'll ever do is absolutely nothing when there's nothing to do. Does that make sense? Everybody in the room. So Aaron, you're learning to trust that the trade is coming. You're learning to believe that there will be an opportunity, even though you want the opportunity right in the moment. And we all go through it. We all go through it. And if there's anyone in the room saying, no, I've never had a problem waiting, you are gifted and talented. All right. I want you guys to see what Boaz did here. You ready? The momentum is a little iffy, right? The smalls are returning. It's not odds favorable momentum. Can everybody see that? We can say, well, it's iffy. It's not the best. Here, watch this. We'll kind of haze it out. But it's still pretty good. But do you notice that he has an absolute clear path? 100%, without question. And we'll take some of the haze off of that one. And not only does he have a clear path, could it really just go back to these three things? He also has an area inside of triggers. So he has an entry area. So even with one advantage gone, he can take this trade and he can manage it. And if things begin to change, he'll manage out. And Cam, you'll recognize that is your same management opportunity. Second divergence, takes an exit. It's not perfect because there's not momentum pushing it. And Boaz, you did this perfectly. 2 out of 3, easily defined entry, nothing in the way. But because momentum isn't really pushing the market, he manages it. He manages it a little more assertively than if he had the best trigger look. Boaz, this is perfect. Perfect. And then, whoops, here we go. Momentum, potential to break, all sorts of divergences, right? And Boaz says, you know what? Because I'm losing the momentum on only the potential to break, I'll force the market to go in the direction of my trade, and I will manage it assertively. And you did. Beautiful job again, Boaz. Do you guys see how he insisted on the down bar? He forced the market to give him exactly what he wanted rather than saying, I'm going to jump in and hope the market does what I want. Boaz, 2 beautiful trades. Great job. And Aaron, you will get it because I am stubborn. And if you guys continually post in my room and you say, this is what I did, this is where I did it, can I do it better? Guys, my promise is that I will work with you and we'll focus on getting you exactly where you want to be. And all you have to do is have the courage to post in the room. All right, so smalls, not above the triggers. Large triggers are flat. Do you guys see it? There is no momentum pushing this market. Not yet. There could be eventually, but right now it's flatlined. The rules say the large triggers must be wide. Smalls were below, didn't have the momentum to push. Still don't have the momentum to push. I'm not going short into support. What am I waiting for? I'm waiting for the large chart to say, hey, you know what? Let's create a little momentum. Let's get you that clear path, and then you can go define an entry. No matter how much I want to be in a trade right there, guys, I don't have the advantages I need to feel comfortable risking my money. And what does that mean? If you don't have the advantages, is it okay to say, I'm not going to get into the market, that I'm going to wait for the next trade? I'll wait for a better trade. I'll wait for a trade where I can define an edge. And guys, hardest thing you'll ever do. Hardest thing you'll ever do is to say, my triggers are down. I'm on the weak side of those triggers. I do have room to trouble. But if I don't get a close on the correct side of the triggers that gives me room to trouble, I refuse to take the trade. But if I do get a close on the correct side of the triggers that gives me room to trouble, well, hell, I can enter that trade. 2, 1, there's your close. There's your trouble. There's an enormous amount of risk on this trade. But it's the patience to wait, guys. It's the patience to wait for the market to give you what you want, to give you what you need. Insisting, hey, I don't have to get in. I don't even have to get in with that much risk, because look what the risk is if you put it above the pivot high. It's $1,400 risk from the weak side of the triggers with a short run. But it does fit the rules. So your job is to say it fits the rules. Because it fits the rules, I'll take it. I'm on simulator, and then I'll go back and I'll take some pictures and I'll annotate some charts and I'll decide if it was really the best trade. Is that really my highest chance of success, coming from support directly into a VWAP from the weak side of the triggers? Maybe it is. But from 36 to 29 is 7 ticks, or 7 points. And 7 points is $140, and $140 times 4 is a hell of a day. And now you got to get into that management. Well, what's going on? My smalls are still below the large. The large are starting to angle down. I'm starting to get a push. I'm starting to get that momentum down. I've got room to the VWAP. Whoa, this is kind of cool. Let's see what happens. Either wins or it loses, right? With momentum, 44 would be a momentum style trade. Maybe you don't want to leave $1,300 on there. Maybe you hide behind. But $215 a contract with the potential to make $140, does it make sense? For some of you it will. For some of you it won't. And if you're not comfortable with the trade, you're starting to put hope on it. And some of you are like, well, I've already taken a bad entry. I sure hope it goes to the mid band. And you just abandon management altogether, right? So guys, when you insist on the best entries, when you take the best entries, when you can manage your risk, when you know where profits need to be taken, that's when you set yourself apart. Until you can do that, simulator gives you the luxury of taking everything, annotating everything, talking through what you saw, what you did, what you thought, and then just dropping that bad boy in the room and say, hey, Mark, do you see something I didn't? Did I miss a read? Is there something that I could have done better? Termination. All right. Aaron, are you with me in here? Check it out. Pete decided to answer your question for you. Well, where's an entry? Well, Pete says, when the triggers start to break through, when I have momentum, when I'm coming from a strong top, when every indicator on every chart says down, do you see how now, with everything pointing the same direction, he gets in? The sellers already, or the buyers already tried to push up, and then they failed. And Pete enters on their failure, not the hope that they don't fail. Does that make sense, Aaron? Because I love these jump-in trades, but there's got to be a method to the madness beyond just jumping in. The seller or the buyers tried, they pushed, but they couldn't beat the trend, they couldn't beat the momentum, they couldn't beat the potential to break, and Pete doesn't enter until they get below something that could create a bounce, and he takes quick profits, and when that momentum starts to go away, then he exits. And Aaron, this is such a great way to take that same trade that you're trying to take, but once it's right, it becomes easy, and until it's right, it really is a more difficult trade to take. Without momentum pushing it, it really doesn't win more than it loses, and without a clear path, with nothing in the way to create a bounce, it's less likely to win. And Pete does a good job, great patience, saying I won't trade into a termination, but if all that momentum cranks him to the other side, there's going to be some opportunity for me there. Nice job, Pete. All right, guys, I'm going to take about 3 minutes. Go stretch your legs real quick. When we get back, we're going to watch the live market. Either rules will be met or they won't. Either it'll be the right trade or it won't. And guys, if we can find opportunities based on the KISS plan, we will enter, we will manage. Don't have momentum. No areas inside of triggers. Do you guys see it? No momentum. No areas inside of triggers. Where's it going to go? That retracement could go somewhere from these 1-to-1s, hell, all the way up to who knows where. Let's see what happens. I'll be back in about 3 minutes. All right, y'all, here we go, last hour. They're just stuck, right? Making decisions. We'll see what happens. S&P still can't figure out what to do. Thanks, rule number 2. Thanks, rule number 1. I'm not getting caught in the indecision and the psychosis. I'm going to force them to figure it out. When they figure it out, I'll look for an opportunity. It almost seems too easy, right? Mark, how could that be? How could, with momentum and the potential to break an area, how could a pullback to an area inside of triggers just produce an awful lot of profits right down to trouble? Boaz, you missed the easy one. It's perfect. It is the perfect trade. And guys, you will miss some. And my hope, oops, same picture. My hope, I like that it's like animated, is that you don't miss these because you don't know. Guys, I traded yesterday afternoon. I took one trade. That's it. And it wasn't because there wasn't more opportunity. It was because I was working. I had to do things. And that's just a fact of life, guys. If you're not in front of your screen, it's not your money. If your rules aren't met, it's not your money. If it's not giving you what you need to feel comfortable, it's not your money. And it's okay. Let it be someone else's because your money's out there, guys. And it doesn't take a lot to amass pretty impressive wealth, to be honest. This is one that I used to give out every morning. Daily trading goals, guys. Times 252 trading days a year. Whoops. Boink, boink. I say, and I say this without hesitation, that everybody in this room, if you've been with me for longer than 3 or 4 days, you should see the potential to make at least $400 a day. If you don't see it, you're either not listening or you're not watching, and I refuse to own that one. But $400 a day is what it takes to make 6 figures. 6 figures based on your trading. Now, I don't want anyone to answer this in the room. It's none of my business. It's nobody's business. If you're not doing that, Boaz, I trade on TradingView. I will trade on Ninja sometimes, but I trade on TradingView, Boaz, and I'll show you why. And I'll show you the exact reason why. Remember when I said everybody has a thing? Everybody has one thing that tends to pull success out of their hands. Mine is I am so damn smart, I anticipate entries, Boaz. I say, well, it's not a close on the correct side of the triggers, but that area should hold, but it should go up, but I believe it's going to do this. I've decided in my head it's going to do that. This timer on the 1 minute chart keeps me out of fights that I lose more than I win. So for me, I dig it. I love trading Ninja Trader. I've done it for years. I'm a big fan. I'm a firm believer in it. But I like the pace on TradingView. It suits my personality. And you got to know what works for you, guys. Got to know. Some people like chocolate, some people like vanilla. It's up to you. It does help on the NASDAQ a lot, Jerry. So things that you have to ask yourself. If you understand your plan, right? And you understand the rules and you're like, yeah, I know the rules. I could probably teach this classroom. What's keeping you from this? Whoops. There we go. Maybe it's me just blacking it out. But what's keeping you from making your goals daily? For a lot of people, it's chasing a number that they think is the right number, right? I have to make $1,000 a day trading. And guys, I don't think $1,000 a day is an unrealistic goal by any means. But how do you get there? I think you get there a couple ways. First, and we're just going to cover this up. First, traders that do the same thing every day. Same rules for entry, Same management for those trades. These are the people that tend to find success. Why? Because you eliminate the what ifs. Traders that have set daily goals and set daily loss limits. Now, loss limits are where you've got to overcome your own psychosis, because I guarantee there's nobody in this room that hasn't been down $1,000 and should have stopped and didn't end up down $7,000 for the day. I've done it. I'll tell you right now, I've done it. So you've got to pay attention to your emotional state. And guys, when you hit $500 and that's your goal for the day, you have to be willing to shut it down or go to simulator. And if you hit $700, $800 down, something's not right. So if you hit your loss limits, and I learned this from John, I'll ask myself, did I follow my rules? I'm down $750. Well, did I follow my rules? 99% of the time, the answer is no. My best bet is to walk away, to take that small loss and then come back tomorrow with a clear head. That's one of the hardest things to do in trading, guys. Trading is an emotional roller coaster. People that have a reason to enter, people that know how they're going to manage the trade that they enter, guys, it takes a lot of the stress out. From John Novak, my daily goal is 800 plus. Thanks, Pete. 800 plus per contract. I will keep trading until I have a $200 trailing stop per contract from equity highs. My daily max loss limit is $400 per contract. When and if it hits minus 400, I will assess. If I took all the perfect trades with zero rule breaking, then I will take a break and I will return to trade again later. If I did break any of my rules or do a poor job of trading, I must stop trading live money for the day. Make simulated trades and do not do any more damage. Either I am off or the market is off. Important, never blow out and never lose more than $750 per contract in one day. And then that's John's plan. And John even says, easy to plan, hard to do in the heat of battle. Absolutely. And I think he posted this in the room, and I love that you saved that. But that is a mature approach to trading, guys, and it's not easy for us to be mature. If you've ever met me, it's definitely not easy for me to be mature. But these are kind of like the little things. So what we do in this room, guys, is this awesome progression. And I'm going to show you one of my favorite pictures. And this is the Mark Novak story. And we all start right here. We all start at ground zero. And guys, I don't care who you are or how smart you are or where you came from or what you did in another life. If you're new to day trading, you're new. That's it. You don't get to be the CEO of the corporation in a brand new endeavor. You've got to be a student again. And we all start here. And when we're here, and please correct me if I'm wrong, but most of you are gonna say, "Oh my gosh, that is so me." The only thing you're thinking about is all the money you're gonna make. I got Nexgen, I'm gonna buy a Ferrari. I got Nexgen, I'm gonna be a day trader. I got Nexgen, I'm gonna be this, that, these, and those. And guys, buying trading software, leasing trading software doesn't make you rich. It's like buying a hammer. It won't go build a house for you. Guns don't kill people, people kill people, however you want to put it. But we all say, okay, this is why I'm going to do it, because I know that day trading offers the opportunity for wealth, for wealth from the living room, for wealth that gets me on the golf course. And it looks like fun in the beginning, guys, especially when you see people in the room posting winners, people that are maybe a month, 2 months, 6 months, 10 years ahead of you. And you're like, oh my gosh, all they do is win. And then you realize that they win so much because they have a plan, because they know what they're going to do. They know how they're going to do it. They know when they're going to do it. They know why they're going to do it. And then you're like, well, I've seen it. I know it works. I'm just going to keep simulating and hope that it clicks. I'm going to try to latch on to momentum, but I'm not really going to learn entries because sometimes I get lucky. And then you go live. And guys, this is my autobiography. 21 trades, 2 hours, $5,000. It's amazing I'm still married. because I didn't study. I didn't know why. I didn't know how. I didn't know when. And we all at some point get knocked back. Sorry, those of you with fragile ears, to the I don't know shit stage. To that point where you start questioning if you can really do this. To that point to where you send me the email and guys, I've got a stack of them. I'm going to quit. This isn't for me. I can't do it. Has anyone felt, you don't have to answer, but if you've ever felt this way, the I don't know, this isn't for me, I don't think I can do it stage, there's hope for you. And there's very good news for you. Several times, right, Pete? I've been there. I was so mad at John Novak. And you know what's funny? Is I was mad at John Novak and I didn't do anything he told me to do. So when I started with the software, John said, hey, Mark, write these rules down. Learn triggerline and Fibonacci rules for when it's okay to trade. And I didn't. I chose not to because let's be honest. Let's just call it what it is, guys. I'm freaking brilliant. I don't need to write rules down. That's silly. That's what stupid people do. That's what I felt. And he said, Mark, practice your trades, right? Go find pictures of what it looks like to have your trade rules met. Go find pictures of what it means to have the momentum that you need, the clear path that's mandatory, and how to define your entry. And he didn't even make it hard on me. Oh man, Pete, I said it. I did. This software didn't make me rich. And what happened is he said, and guys, this is so easy. He said, Mark, go take 10 longs and 10 shorts. Go take pictures of what it means to have your rules met for 10 long trades. Go take 10 pictures. That's it. Of that pattern so that you know exactly what it takes to get you into the market. So Aaron and Cam, as you talk about these things and that patience, go take 50 pictures of this pattern. Stop putting the pressure to win on yourself. Learn what it looks like when you have a better chance of winning. And that's what he told me to do. And again, guys, I'm smart. John Novak, don't tell me how to live my life. I've got indicators. Don't know what they mean, but damn it, I've got software. And then he said, and man, he said it more than once, come to my room. And back then it was like chat something or other. Come to my room as you simulate and let me give you feedback on everything that you do. And let me talk to you about every trade that you take and tell me what you saw and tell me what you did and tell me why you did it. And Mark, if you do that, true story, if you do that, you're going to understand exactly what you're looking for, exactly where you're looking for it, and you're going to create a management plan. And if you do that, you can avoid all of the heartache that day traders face. Now, here's the part that he didn't tell me that I will tell you guys. And most of you know this. Shut up, Mark, I'm going to do it my way. Right? The same way I said, shut up, John, I'm going to do it my way. I'm too smart to have to learn rules because I have indicators. There's no way I'm going to take the time to take pictures and recognize a pattern, and I'll be damned if I'm going to present losers in the room with the last name Novak. What will the neighbors think? And guys, I got exactly out of the software what I put into it. True story. Exactly what I put into it, I got out of the software. But there was hope for me because when I got tired of losing, when I got tired of being frustrated, when I realized that it wasn't the software's fault, that I couldn't figure out how to find profits, I embraced everything John Novak told me to do. And I started presenting in the room. And and this was the big one for me, I started filling out my trade tracking sheet. And I started writing his feedback on my sheet. The feedback section is something I added because it paid huge dividends for me. So I was no longer flying blind. And probably within the first couple weeks of doing it, John said, Mark, you trade into termination conditions. Here's how to fix it. And then the next week, John said, Mark, you trade into termination conditions. Here's how to fix it. And then the next week, John said, you trade in determination conditions. For the love of fuzzy, how many times are you going to lose these trades before you get sick of doing it? Because he's my brother. And the answer was like 1,000. So you guys that trade into 1 minute areas, hoping to win, there's a number where you'll get sick of doing it. You guys that fight the small trigger direction on the large chart and you continually lose, eventually you'll get sick of losing it. But the conversation that we can have, why did this trade fail? It was into a termination. Why did this trade bounce and take me out? Because there was no room to run, because you were fighting the triggers, because you didn't have what you needed to feel like you had the edge. And guys, I'm telling you, trading doesn't have to be difficult or stressful, but it is for most of us, and it's all self-imposed. And I forgot what I was talking about, to be honest with you, but I really believe that if you take a minute and let it be easy, let it be simple, play in the room, have conversations, you'll get everything that you need to find success with the software. And a lot of you guys exemplify it. Because don't think I don't remember when Jen took 174 trades a day, right? And don't think I don't remember when Carl was trading in determination conditions, or Samuel was brand new and didn't know what momentum was. And Andy was like, I don't get this clear path thing. And Izzy's like, dude, Mark, just whatever. What are we talking about, right? I remember, guys, I was there. I did the exact same thing. So let yourself be human and really just enjoy the ride. Because when you get to the point to where you know what you're doing, it'll change your life. It'll change your life. You have to go back to get 50 pictures long, 50 pictures short, mark them up, and save them in the sheet. I love it, Cam. And so I used to give this out. And I stopped doing it because everyone just ignored me, and I think I got my feelings hurt. And this is Chart Reading 101. And the goal is that you look at your large chart first. So Aaron, this would be very beneficial for what you were doing. I don't think he's in here anymore. Go take 25 pictures of just strong triggers. That's it. My commitment to take a trade. Rule number 1. And if you did that, you took 25 pictures of strong triggers, and then you took 25 pictures of weak triggers. But not just the pictures, and this is the important part. This is the work part. But actually take the time to type out why they're strong. So smalls above, large, wide, direction of trend. This is strong triggers with an actual arrow. And it says that it's odds favorable momentum and that rule number 1 is met, and look for longs on a smaller chart. And guys, this is literally the look. You can't. I'm just going to say it. I used to say, do you think you could? I'm just going to say it. You can't. You can't take 25 pictures of strong triggers and take the time to annotate it and make the mistake of believing that your weak triggers were strong. In the same way, you can't make the mistake of believing your strong triggers are weak if you put the work in. Same thing with the clear path and terminations. And this is what saved me. 15 pictures a day. John finally said, just no matter what you're doing, 15 pictures a day and annotate them. So Cam, it would take you a week to get those 100 pictures, probably, most of them. And it feels like a lot of work, but it's really not, because it took me an hour. It took me an hour to build all this for you guys. There's a way to get there, guys. And the first week or two really doesn't have much to do with trading. It has to do with learning 3 very simple looks that produce a trade. Put the work in. And then having a checklist, having a spreadsheet in front of you. Knowing the whys, having a management plan. Did you guys know that in the KISS plan that I give you, it literally tells you how to enter. This is the trading view plan. It gives you the looks. It gives you the checklist. It gives you everything. You have 185 pictures since you started in June. I take at least 1 picture every trade. You actually have to do this. So 25 pictures, strong triggers, weak triggers, clear path, terminations, right, Cam? And then once you can look at your large chart and say without question that you have the advantages that you need, the entry becomes easy. The entry is because of the large chart, not the other way around. So you'll look at your large chart and you'll say, hey, look, I have momentum. I know that. I've taken 50 pictures of it. It's only the potential to break. I know that because I took 50 pictures of a termination and a clear path, and it's neither. It's right in between. And if I wanted to take a trade, I know without question exactly before I ever get a reversal bar where the area inside of triggers is. Do you guys see how quickly that happened? First it's momentum, then it's potential, and my entry, the rules say, pull back to an area inside of triggers. There's my triggers. Hold on. There's my areas inside of triggers. The only place a trend trade could originate is inside of that little box. I want to be at the bottom of the box. I don't want to miss it. Now it's 3 triggers through. It just keeps getting better. And if they don't hit those 1-to-1s before they give a pullback to an area inside of triggers, my rules are met. What's the smallest amount of money you can trade per contract on a live account on NinjaTrader? Are you asking about margins, Lava Lamp? And we're about to lose our area inside of triggers, but now we've got odds favorable and clear path. I just can't define an entry. Lava Lamp, are you asking about margins to trade? I just want to make sure that I get you the right answer. Okay. So NinjaTrader margin requirements PDF. So if you want to trade a large contract of the NASDAQ, day trading it, right? Not holding overnight. That's the E-mini NASDAQ. You have to have $1,000 in your account to make it happen. Now, if you did the micro NASDAQ, you only have to have 1/10 of that, but you only get 1/10 of the profits, but you only have 1/10 of the risk. Now, here's what new traders do, Lava, and I want to do this. If you have to have $1,000 to trade the NASDAQ, one contract, you can't even trade a 2-lot unless you have $2,000 in your account. If you lose your first trade, it's a margin call, and you've got to go put more money in. So the old accepted is you need the base margin times at least 2 to trade one contract. So you would need $2,000 to trade the NASDAQ to give yourself room for $1,000 in losses before they called you for more money. Does that make sense? Now check this out. Here's where I am the bringer of good tidings. You can go to Nexgen Pro Trader Funding and you can trade a $150,000 account and you could trade up to 17 contracts and you can do it for $79.80 a month in the evaluation. Now you don't just get the profits, you've got to hit a goal, and then when you hit the goal, you go into what we call a semi-live account. And in the semi-live account, where is it? After you hit consistently, again, that same goal, well, now you're eligible. Oops, I'm doing it all wrong. Now you're eligible to be paid on that $150,000 account with the profits that you generate. So the days of needing $20,000 to be a futures trader are over. This is what prop firms do for you. Nexgen has a prop firm. And guys, it's my job to teach you how to beat the prop firm. It's my job to give you a plan capable of getting you funded. And I don't know why more people don't just do it. So Lava, if you're doing it on your own, it can be pretty expensive. If you want to use a prop firm, you can control $50,000 for $50 a month or $50 a shot. Most people will move to semi-live or blow it out before. But instead of losing $1,000 and getting a margin call, you can lose $22.50 and it only costs you $50 of your own dollars. And prop firms are a great way. I've learned my plan. I'm comfortable with my entry. I know my rules. I'm going to go to a prop firm for 50 bucks and see if I can follow my rules. You can copy up to 5 accounts, Jerry. That's it. So are you familiar with how a copier works? And let me see what's on the page. I don't have a ProTrader account, but basically what a copier is, okay, you use the Apex copier, right on. So John Novak went through just an insane amount of programming with our copier. Let me see if... So the copier is 20 bucks a month. And essentially what it is if I enter a trade on TradingView, if I go long 4 contracts on my lead account, you can follow that account with 4 other accounts that you just went long 4 on, and you can do it all, and you can trade all 4 accounts at the same time by only executing on one. And it's just like any other copier, guys, except it has like a millisecond reaction time. It's pretty awesome. John took everything he hated about other copiers and programmed it out of his copier. But the funding company will let you copy up to 5 accounts. I'm not sure, Sam. I would ask. My guess is with us, no, but I'm not sure. If you go to the page and just type it in, here, let's see if it comes up AI. Following accounts fill limit orders at market. That's it. So it's just like a normal copier. I just think it's better engineered. Let's see. Chat now. Hopefully this doesn't go to our tech. Can I use Repla? How do you spell that? Canto with the funding company. And we'll see if AI does it. Ignore this. This is Novak. Never mind. So they want to get an email and everything so that they can stay in contact with me. I don't know, Sam. If you go to, I would fill it out and ask the question. Let me ask though, before class is over. Someone, I'll get you the answer. Good thing I type fast. And I'll put it in 2 different chats there and see if I get an answer. So I'm inclined to say probably not. Because other prop firms are using Tradeovate or what's the other one? Rhythmic. And we are through AMP. And I don't know that AMP has a copier that they actually use, but I'm not sure. I mean, don't quote me on it. But whatever gets copied has to go through AMP. And I don't know how that direct line is created. Really what I'm saying, Sam, is I'm not sure. Let me find the answer for you. Someone's going to answer me. There it is again, momentum and path. Jump the fudge in. Enjoy the spoils. Nice trade, Pete. And the momentum style entry, Pete, that Nexgen teaches is that pullback to the fib right there. I know you like to wait for it to head back down, but that's your momentum style entry right there. And usually you give it a couple ticks above trouble. I know you know that, but point it out for the other guys. So Replicanto is built for NinjaTrader. Is the answer that I just got. So Replicanto may not even work on TradingView, Sam. and you can't do the prop firm through NinjaTrader, there you go. But we do have one for you. Awesome. All right. Momentum, path, pull back to the area inside of triggers. Didn't work, did it, Boaz? Just didn't work. It's a great look, but it didn't work. Why? What did he do wrong? What do you guys think? He had momentum. He had a clear path. He had the perfect entry. Anything that wins 70 to 80% of the time, guys, it's mathematically obligated to lose 20 to 30% of the time. Boaz, this is paying rent. This is the cost of doing business. It's a beautiful trade. I would lose that one with you. No. Well, yeah, it's right at the base. So you could say, if the market gets 5 or 6 ticks below, I'll choose to exit. You could do that. Maybe tighten up the risk a little bit. If it doesn't hold, once you get below it, you're where the market shouldn't go. And they just came back to the mid band, and the large sugars are a full bar away, and it probably started back up somewhere over here. That's 2 moving averages, Boaz, like a tick. That's horseshoes and hand grenades at that point. You're right on the line. I think it's a good-looking trade that just didn't work. You didn't even have divergence coming off those 1-to-1s. There wasn't a big indication that they didn't want to go. It just didn't. You take that trade anytime, Pete? I would too. And I would not even begin to feel bad about it if it lost. Not even a little bit. Guys, remember when I said if you're not sure if they're up or down, the people in charge might not be either? Makes it a little harder to manage trades like that. We've got another 10 minutes or so, guys. What do you want to talk about?